So we at CryptoTax are planning and we are aiming to solve this problem. So whoever are the investors, whichever country you are from, you can just add your wallets, link your trades, and we will do all the calculations for you.
Cryptocurrency taxation has been a gray area for quite some time now. As digital assets continue to gain traction, taxation becomes an important aspect across jurisdictions. Today, we simplify a lot of these hovering questions around the topic as we chat with Abhinav Soomaney. Abhinav specializes in the field of cryptocurrency and has a 5+ years of experience in assisting investors with crypto tax calculations and investment management. He's a managing partner at CryptoTax International and blockchain and crypto tax department head at New Mysore and Associates LLP. Abhinav assists clients including exchange platforms, ICO companies, traditional traders and investors, crypto miners, blockchain developers, DeFi investors, and the list just goes on. We welcome you to CuratedX, Abhinav, and really look forward to some enriching conversation today.
Thanks for having me here, and thanks for the introduction. And I also look forward to this session because there's so much to share in the crypto space, like you said. It's still in the gray area, and there's so much information out there that everyone has to know of who are trading with crypto. So I really look forward to this session.
Absolutely. So to kickstart the discussion, why don't you just let us know a little bit about yourself, your educational background, and what led you to venture into Web3 and cryptocurrencies?
So a little bit about myself. I've done my MBA, MCOM, BMS, the regular management studies courses, and then when I came to the US to do my MBA, I was in one of the classes of my MBA, and my colleague was like, "Have you heard about crypto?" I'm like, "No." So he's like, "You should invest in it. It's the new money." And this was, I believe, somewhere around 2016. So I'm like, "Okay, I'll research about it." And then I did research about it, and I kept looking into what it is about. And then I joined this CPA firm in California that was assisting clients investing in crypto. So that was my journey, how it started off, me entering the crypto space. And then I kept doing my research. We assisted a lot of clients, like with helping them finding out ways how to file their taxes, calculate taxes, gathering transactions for them. So the whole idea about you sending money from one country to the other within seconds amazed me. And that itself is a huge benchmark. Also, the point of the blockchain, like it stores so much of data without you worrying about anything. It's totally different from how it used to work before. So all of these things, and it's keeping on growing. There's so many things coming up. There's nodes coming up, NFTs. So that's what drove me into this space.
Absolutely. It's very fascinating how you get into this space and you realize, okay, that there's so much interesting things happening that you really need to dig deep and figure out, okay, how do you connect these dots together?
Absolutely. Yeah, it's really amazing. When I started off, I was working just as as an associate at this firm, and today I have gotten up with my own company in India to assist all investors with their taxes, which is very important because to know what taxes you're supposed to file is also as important as you making the money.
Definitely. So on that note, moving on to the business side of things now, there definitely seems to be a gap in the market with respect to guidance around crypto taxation, and there is a need to clear the frost around it. So a lot of people also are very skeptical of holding digital assets now due to lack of understanding of the taxation aspect. So on those lines, Abhinav, can you tell us a little bit more about CryptoTax International and what are the problems that you aim to solve with the crypto tax software that you're working on?
So first of all, CryptoTax International was introduced to just help the investors in India, but as the name suggests, international, right? So we've also incorporated an entity in the US and in Dubai. So we're trying to make it a global platform that has a base in most of the countries that we can reach out to. And the software that we are working on with a few developers and others in the space of cryptocurrency is that there needs to be a platform that helps investors with all their crypto tax solutions like NFT, DeFi. There's farming, there's loans, swaps, there's wraps going on, there's regular trading. Everything has to be under one umbrella. Like right now, there's no software as such that records DeFi transactions. And even a lot of software that I've seen and worked with in the past 5 years, all of them have a similar gap in them. Most of that has something to do with when you're transferring coins from one platform to the other. So we at CryptoTax are planning and we are aiming to solve this problem. So whoever are the investors, whichever country you are from, you can just add your wallets, link your trades, and we will do all the calculations for you.
It sounds very exciting how you're going across boundaries and understanding, okay, things do differ across geographies, but there's actually this gap that you need to fulfill. And this also gives a good segue to my next question around the tax calculation softwares. So there are a few tax calculation softwares that allow investors to link their exchanges and wallets using the API keys to calculate these taxes.
Right.
Are these reliable and audit proof? And also, how does the crypto tax software distinguish itself from other alternatives that are currently available to the investors?
So first of all the software that are currently available to investors have a common disclaimer that, if they are audited by the government, the IRS, or the income tax department in India, they do not take responsibility of presenting or supporting that audit. So because the whole point of an audit is they want to investigate what transactions did you make and how much money did you earn. Now, when a software does the job, there's a calculation behind the scenes, and they don't really show you the working of how it's done. It's just a software and there's a calculation going on, but there's no supporting documents for that. I have attended one of the first US audits that happened somewhere around 2017. And it was for one of our clients. He had a portfolio of about $200 million back in that time. The documents that I presented to the auditors were bank statements, exchange screenshots. We had to verify our calculation methods. Why are we doing the transfer analysis? What is the cost basis of few transactions? So there's a detailed review that's going on. Now, a software cannot provide that. At CryptoTax software, we plan to provide some sort of an open API for even investigators. So for example, if the government wants to investigate a client's calculation, so we will be happy to share that information of what calculation algorithms were used for that client. And the IT team for any respective government can do the investigation, and our team will fully support that system and process. So this at least lets the investors know that they are safe and they need not worry about, like, will we be audited? If yes, do we have support for it? Because CryptoTax will be the first tax software that has forensic accountants, CPAs, tax attorneys, CAs, and a lot of people in the crypto space backing it. So it is a very strong project that's coming up, and I don't see any other software that has such sort of a backup to it.
Definitely. I think it's intriguing how there is so many things, there's so much data that goes behind it, and you bring that clarity and bring it out in the open. Okay, this is the kind of data which a lot of people don't really understand. Okay, this is a software, we just use it and we get what we want, but what goes behind it is essentially the crux of the thing. So moving on from there, a number of countries as well are coming up with guidelines on crypto taxation, and some thoughts are also being laid on CBDCs as well. But the level of acceptance varies, right? So, and hence the tax laws on cryptocurrencies and digital assets also vary across geographies. So if you can throw more light on a broader level differences across some of these major jurisdictions with regards to crypto taxation.
So I would like to start with the US, obviously, because I have a lot of experience in the past with US taxes. So how it works is if you hold a coin for more than a year, there's a long-term and short-term capital gain applied on that. That's 20% for long-term capital gain and 40% for short-term capital gain. There's NFT taxes that come into play very recently because there's a lot of investors getting into the NFT game. So NFTs, they are not considered as regular capital gains. There's an income summary prepared for it, and it goes on the Schedule C of the client. And there's expenses that NFTs incur. Like, I'm not sure if obviously about the expenses, but not all clients can track them. So you have to enter your wallet addresses in the right software to get the right data out. Now, I'm a big follower and supporter of Covalent because they have provided API keys to a lot of these other software platforms that actually help you get the data. The one that I like is called Zerion. You can just link your wallet addresses over there and pull out all sorts of transactions and how many ever fees you pay. So those fees can be deducted as expenses when it comes to NFT taxes. There's DeFi loans that you pull out from platforms and the DeFi swaps that happen. So when you do a DeFi swap, generally you're transferring the coin from one wallet to the other, which is not a taxable event. Again, circling back on software. Software is considered this as a sell order, which is not a sell. You're just swapping it or you're just giving it as a loan. and you're going to get it back. Even if you're staking a coin, some software consider it as a sell, which is wrong. So that needs to be addressed immediately at a global level, so that at least taxes are filed accurately. Now, when it comes to countries like India has a straight system of taxing it at flat 30%, and which is, in my opinion, a good initiative. So it doesn't complicate things. Like, investors don't need to be confused about what they need to do next, because there's not much regulation around it. It's the first year for India to actually implement tax laws. And any transaction you make, it's going to be flat 30%, 1% TDS on all transactions. That's straightforward. Again, when it comes to calculation methods, another country that I would like to touch base on, or a jurisdiction, would be Dubai. There's no tax applicable there. So there's a lot of clients that I've heard in the recent times that are moving to Dubai because there's no income tax over there. So, they want to save that 30% or 40, 20%, how whichever country they're moving out of. So it totally depends on which country you reside in and what residency you hold. For calculation methods, there's a lot of methods out there, and which can be applied at a global level. All countries can use these methods. That's the highest in first out, last in first out, and first in first out methods. All of us must have heard about this while we were, getting our education done, but it's time to imply it for crypto investors. It's basically like inventory management, where you would essentially use the highest in first out, which means highest cost basis pool towards the first sale. That's my recommendation, and I use it for all my clients. That's like about 200 to 300 clients that we assist. So that's about what calculation method you should use. Now, that doesn't really matter which country you are in, but these are the basic guidelines from my end.
Absolutely. So I'd just like to take it on from there itself, if we can dig a little bit deep on, because there are these hovering doubts, right, around different methods of crypto tax calculations, because a lot of people are not just aware, and also gathering the required on-chain and off-chain data when it comes to calculating these taxes. So
Right.
what do you think is the most crucial aspect when it comes to this crypto tax calculation? And if you can just dig a little bit deep and let us explain what are these different calculation methods, and how do you find out that, okay, this one fits the client's best needs?
Right. So, in my opinion, the highest and first out method will fit every client's needs, because what it does is it picks up the highest cost first and uses it towards your first sell. So if I'm buying Bitcoin at different prices, it's going to pick the highest price, which reduces my tax liability. It doesn't really reduce it, but delays it. And when you delay a tax liability, it becomes a long-term capital gain versus a short-term capital gain. So it in a way saves the client money tax-wise, and that is my opinion that I apply for all the clients. And also I support it much because it's cleared audits. Now, when you say about gathering the data, I would say Zerion is a great platform just to gather data for your wallets, again supported by Covalent. The API keys provided by them. If you want to use NFT transactions and you've traded with NFTs, NFT Bank is a great platform just to plug in your Ether blockchain addresses and get all your transactions. They provide tax reports. That's very helpful. So the investor doesn't need to do much. Just plug in your wallet addresses and export tax reports. So it's straightforward. Now, the most crucial part here is transfer analysis. Now, transfer analysis means when you buy a coin in one platform, send it to another, and then send it to a wallet, and then you buy NFT using those coins. So you have to track the cost basis, how much you bought the coin actually for, and keep transferring it on to the place everywhere you're sending these coins. That is the trickiest part that I face with all clients, which is why before getting started with the calculations, we have an in-house calculation template set up within the firm. Before getting started with the calculations, we do the transfer analysis. So we use the actual cost basis for each client. Now, there's a lot of situations that I would say are crucial for clients. Like, for example, there are a lot of problems that they face, like missing coins. They lose coins, there's hacks going on, there's swaps going on, they burn few tokens. So a lot of confusion around this, that how do we treat it with taxes. So every situation has a solution, and the solution is to do a lot of research or reach out to a professional like us who can actually guide you, because we as a firm, we do our research on a daily basis, because we literally assist clients every day with in the crypto space. So we have to be updated with all the tax laws.
Absolutely. And definitely, I think it's very useful for investors to have an advisor like you or a professional like you, because when you get your hands into investing in the very beginning, it's still okay, but when you get deeper into the system, there are a lot of integrities and there are lot of these details that you get into, and you need to figure out, okay, what is the correct way of doing it.
Right.
So now talking specifically a little bit about the Indian economy, which has seen a substantial volume drops post the taxation guidelines on crypto assets that came into effect from April this year. The government is taking a conservative approach, we believe, in giving a clear advice on acceptance and regulations of these digital assets. So in the Indian context, there are two parts to the question that I'd like your views on. Firstly, the 30% tax law coupled with the 1% TDS, which comes into effect soon, levied by the government on these crypto assets. So how do you see this move by the government and its impact on volumes? And secondly, there's also no clarity regarding the setup of losses against profits from other crypto assets. So if you can shed some light on that as well for the benefit of Indian investors.
Right. The first question, I would like to answer that first. So, what would it like? So, what was your first question again?
The first part was the 30% tax law coupled with the
Right.
1% TDS. So
So,
how do you see this move?
right. So, in my opinion, this 30% tax law, flat rate, and 1% TDS, they have applied these laws to keep it straightforward for investors. There are so many tax laws involved with cryptocurrency, especially in the US market, that it has confused everybody. You don't want to get too confused in the beginning, or it's going to create chaos, because there's staking rewards. How would you tax staking rewards? How would you tax so for example, when you get bonuses from credit cards, we don't pay tax on that as income. We just get the reward and spend the money. But in crypto, when you get such rewards, it's considered as income. You tax it once on income and then tax it again on capital gains. So if India would have implemented all those tax laws immediately, it would have created a lot of chaos in the market. So I think the 30% flat rate is a good implementation by the Indian government. Now, when you move on to the 1% TDS, it's basically done just to keep track of Indian traders, because they need to track everyone using their PAN cards, Aadhaar cards. They want to know who is investing and is all investors paying taxes. Because if I'm an Indian investor, I'm sitting in India, I have a wallet, I have a MetaMask wallet, I have Ethereum in that. I send it somewhere else on a Uniswap and I trade. No one's going to track it. But if WazirX or CoinDCX actually uses the PAN card and tracks all my transfers, now the Indian government knows how much I'm making. They're just keeping it fair, in my opinion. And 1% TDS on the entire transaction is not a big amount. Like, I know that it is pinching all investors, that why should we pay that 1%? But it's a government move. 30% is not a good move. I believe they should have kept it a little lower than that. And the worst part about this, the only bad part about the whole tax implementation that India has done is not allowing investors to offset their losses against income on other assets. Now, for example, if I have a loss on Ethereum, I need to write that off against my gain on Bitcoin, or else, I'm only going to pay tax on my gain on Bitcoin, but I still have that losses on Ethereum. That doesn't matter to anyone. Um, that's something that I look at it as a big drawback in the whole taxation, implemented by India. But there will be amendments, in my opinion, and India needs some time to wrap their head around the tax laws. Population is massive. The most number of crypto investors in the world exist in India today. So they need some time to manage all this stuff. And it's a very new thing. Like, it will, and in my opinion, if they can adjust the just writing off losses against any other gain, if they change that law, it's going to be great for the Indian economy. More investors will come in, they will participate in Web3. This is time for innovation and growth in India. They should not stop it. Indian investors should invest in cryptocurrency, but invest in good companies. There are a few companies that have not worked well, like we saw how Luna performed in the recent times. Yes, there are a few companies that do not perform well, but look at the brighter side. There are a few companies that solve real time problems. So do your research, look at platforms like ICO drops. Look at coin market cap, see the maximum supply of the coin, see the backers of the coin company, what is the current circulation, what is the ICO price. So these things matter. It's like you investing in the stock market in a company that's getting listed. Do your research, and then I think the money will be safe till this part is taken care of by the investors.
Absolutely. I think It's an interesting perspective that you bring to picture, how that makes sense, the flat 30% tax rate and simplifying a lot of things. But yes, amendments do need to come in place as we progress, considering the Indian economy with masses where we can drive so much innovation. And there's that we see a lot of talent also, in-house talent, a lot of Web3 companies being born out of Indian investors as well. So I think there is definitely a lot of scope. And any new technology does take time, not just for retail investors, for institutions, and even for governments. So the
Right.
Indian government also will take its time to figure out, okay, what is the best way that we can put this out across. So
Absolutely.
would like to again dig deep on one of the aspects of taxation. So whenever there is an M&A deal or a protocol for some reason decides on changing the supply of the tokens, then how does one show this in the books? For example, just like we saw in an Alron token swap, right, from ERD to EGLD, when the supply was slashed by almost 99%, and other cases where the projects may swap the original token with a new one. So how do
Right.
you show this in the books for taxation purposes?
So to keep it simple, there's a term called burn tokens. So when this swap takes place, you have to essentially link your wallet address to the place that is recommended by the blockchain or the company that's doing the swap, and you transfer your tokens that are the old tokens to the address that they provide you with. That is called as the burnt address. Now when you're burning the coins, you're essentially losing rights over it, and you will receive other tokens in exchange of these burnt tokens, but the ratio will be different. Your cost basis remains the same. So for example, I paid $10,000 for some number of X number of tokens. Now I get a fraction of those tokens back in another name, but the value remains the same. So my cost basis, I have to hold on to that cost basis. If the coins are going out, apply that same cost basis to whenever you sell the new tokens. This is not a sell transaction. It's not a taxable event. You're just swapping the tokens and replacing it with new tokens. Whichever government is doing some sort of an investigation or an audit, it is a clear communication that we haven't sold anything, there's no money coming in, it's a simple swap. It's a you're just converting one, the company is converting one token to the other. It's like a stock split. When there's a split, you receive certain number of tokens on top of whatever you have, and a certain percentage drops sometimes. So it's similar to that, but it's surely not a taxable event.
Absolutely. I think that is the clarity which is needed to people, because we talk of stock splits, we talk of maybe staking rewards, and how do you tax all of these? It's still a gray area which a lot of investors are still trying to get hold of and figure out, okay, how do we evaluate such a transaction?
Right. Let me also tell you about staking rewards now that we brought
Sure,
it up.
definitely.
So when you are staking coins, you essentially receive airdrops in form of any other token like Ethereum or whichever token you're staking. Staking rewards are considered as ordinary income when you receive it, and you have to track the cost basis when you receive the deposit. And then there's a capital gain or loss depending on when you sell those tokens. So it's a dual tax event. It might sound a little complicated. It's a headache to track, but that's the reason why you use good software or professionals that can assist you with it. There's no good software, so the only route that's left for investors right now is to find a good professional till we actually come up with a software that integrates through all these investments.
Definitely. So I'd like to move to the other side, and maybe before we wrap up, talk of how do you see the entire ecosystem? So we do see a lot of new and upcoming projects across the spectrum, be it in DeFi, NFTs, gaming, layer ones, metaverse, and so on. So which segment are you most bullish on in the next couple of years as markets begin to revive again?
I'm bullish on the NFT space. It's just getting started. There's going to be NFT movies coming up now. There's going to be everything that you can see might be an NFT. I recently saw Ronaldo doing a collaboration with Binance to create NFTs. All the major companies and big personalities are joining in the NFT space. So there's going to be music albums on NFT. So people like me and you can actually buy an entire music album using Ethereum or another cryptocurrency, instead of just all these music industry and music production houses getting the rights. It's great times coming ahead. Even metaverse, like we see all these companies open up stores in the metaverse, and we wonder what it is, what's it about. It's not just you wearing a VR and just imagining stuff, but it's actual. You can actually shop using that technology, and that product will probably ship to your house. People are buying houses in the metaverse. you know there's a lot coming up, but the only thing that I would recommend everyone is, no matter what you do in the crypto space, keep your data very close to you. Because if you don't have the transaction history of what you did, you will not be able to do anything moving forward. Nor your taxes, you won't be able to strategize your investments. So I am very, very bullish on data. So data companies that have either rolled out their tokens or coming up with token listings, that's something that I would look into.
Definitely. I think it's very fascinating how a lot of these newer worlds are being developed in the metaverse or in the NFT space, and how they are being integrated, right? Even in the metaverse, you have a gamify model, you have NFTs, you have DeFi being integrated, and there's so much happening that it's essentially a rabbit hole that you get into once you start reading and learning more about it.
It
So
is, I enter a new rabbit hole every day of my life. There's a new thing to learn in the crypto space every single day. Because when I talk to a new client, they give me a new problem to solve. So that's the fun part about the whole crypto space.
definitely. So just one last bit before we close up. So what would be that one advice that you would want to give to newer people, newer investors who are wanting to venture into the space? So where should they get started?
Um, there's a few names that I would like to take for all investors to use as research points. Because when you lose 60% of your investment, it's not a good experience. Like I've heard investors losing millions of dollars overnight on Luna, and they were not happy with it.
Yeah.
So look at ICO drops. That gives you a good explanation of what the company is up to. When is the ICO going to be coming up? What is the listing price? Who is the team behind it? What is the technology they're coming up with? What is the problem they're going to solve? And is the problem even real? Does the problem exist, or they're just coming up with something that doesn't even work? Look at their Twitter handles, do some Google article researches, look at Reddit pages, YouTube some videos on that company before you put your money. So because the crypto space is you never know, like recently it just dropped so much. So no investor would like to lose 70-80% of their money right after investing. That's going to lose trust. So if you want to actually invest in the crypto space, research first and then invest. Don't forget your data. Data is the most important. I keep saying this, but how many more times I say it, it's less. Because I've experienced so many clients having trouble with their data, that Binance, one of the platforms that recently also had some issue with API keys linking on a platform. So we had to export transactions from Binance and then get the calculations done. So don't rely on API keys 100%. Keep all your data, keep exporting transactions. It's going to help you.
That's a lot of enriching points that you shared that one needs to keep in mind before they get started, and also that very important point of keeping your data handy at all times as soon as you get started. On that note, we'd like to thank you for this insightful conversation today. There is so much to take away from this. I'm sure this gives a lot of clarity to our listeners on the taxation aspect of digital assets and opens avenues for people to invest in this alternate asset class. There is a clear use case and a product market fit for the software that you and your team are building. And as crypto adoption increases, right, among retail as well as institutional investors, there seems to be a significant market for such a software. Once again, Abhinav, thank you so much for being a part of CuratedX, and we wish you all the best for the success of the software and the great work being done by you and your team.
Thank you.